What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 28th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about an incredibly important dynamic that we have to understand about cryptocurrencies and maybe even the broader macro environment when it comes to the stock market and assets as a whole. It is something that no matter if you are bullish or bearish on the market, is an important dynamic to understand in order to maximize returns during opportune windows and to hedge losses during downward periods. We've got a lot of things to dive into in today's video. If you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. So I want to start here by talking a little bit about something that's going on in the crypto space right now, what may be moving in the broader range of assets across the board. Now, I know a lot of people here fit into different camps of investors, and some of us resonate with certain types of assets. Some of you out there are maybe the time-tested, dollar-cost average, Bitcoin maximalist who's only about Bitcoin. Some of you may be in the similar camp for Ethereum, and many of you out there probably fall into a basket of different examples of people who are very exposed and interested in altcoins as assets. Now, as you all probably know, everyone's experience investing in crypto, depending on what they're invested in, is going to vary. If you've been in Bitcoin here in the near term, Bitcoin has definitely been the winner. It's up here towards its relative highs here in April, and whether or not it continues higher or not, the question remains here, how big of a difference would your performance be being in Bitcoin versus being in altcoins? Well, many of you know the answer to that question. It's been much more favorable to be in Bitcoin as of recent. Altcoins, as we've been kind of pointing out since August, have continued to bleed. Since back in August of last year when we sold our positions, against their comparative Bitcoin ratios, I mean, altcoins have just continued to continue cratering here within their valuations. So again, we can see here BNB, the largest altcoin under Ethereum, right, the third largest cryptocurrency, is just this past week, back from the week of June 19th, lost another 15% against Bitcoin. Now, I understand some people may argue again for altcoins, but Nick, you have to look at the dollar value. They're not down that much. But the thing is here at the end of the day, it got outpaced by Bitcoin 15% in a week. And that's following multiple weeks like this. We had another 19% decline back here in early June. And this is a part of a longer term downtrend where essentially BNB, since its highs back in November of 2022, have declined by over 61% against Bitcoin. That is not a good look for those who are exposed to BNB. You are massively underperforming the benchmark asset, Bitcoin. So we can see this across the board here in a lot of plays. We talked about this with MATIC. A lot of people, again, saw the dip here in a lot of these plays. They looked at the historic kind of dip buying opportunity here around 69, 70%, and they thought, oh my God, I'm going to buy into it. Well, it's just faded right back down, and it looks like it's going to continue moving lower here towards our target here of the lower band support line. And as you all know, as we've talked about before, those 5-10% additional moves from top to bottom can be major differences from where we are now of around 2,100 Satoshis, or generally speaking, maybe 21,000 Satoshis, down towards equivalently, down towards around 1,250 or around 12,500. So huge difference here, right? And this means that, again, while maybe in dollar terms, perhaps we get it wrong, maybe we're in a new bull market and Bitcoin continues to soar higher, and maybe MATIC will still move up in dollar terms, but you would have just been better off buying in Bitcoin. Right. Along with that as well, we've got plays like Cardano, right? Again, same exact situation as MATIC here. Got a little bit of a buy up bid here, but it's essentially been continuing to fade after an already continuing downtrend since back in August of 2021. Down roughly from where we are now at around 85% from those prior all-time highs, with our target looking to be around 92 to 93%. Right? So we've been talking about this for some time, how altcoins are not going to be as safe of a bet as they were during optimistic times. And this even goes for Ethereum. I know some people think that Ethereum is immune to it because of its supposedly better monetary policy against Bitcoin due to EIP 1559, which burns a lot of the ETH that's utilized in transactions. And along with that as well, you have the staking, which going from proof of work to proof of stake lowered the inflation rate for Ethereum, and therefore sometimes it can be deflationary or generally have kind of a cap supply. And people think because of that, ETH is just guaranteed to go up. It's got a better monetary policy, and if Bitcoin's going to go up, ETH's going to go up. Well, it doesn't really matter at the end of the day, guys. If people are on a risk-off mentality, and they are generally more eager sellers than eager buyers in the market, and we're not seeing a new wave of users or adoptions or narratives, ETH's price will underperform against Bitcoin, especially considering how much it accelerated from August of 2019 up here towards its highs in November and December of 2021. That's why we've been highlighting this range for a long period of time, that if you are looking to add into positions on ETH, at least wait towards those cheaper valuations. But this is all besides the point here. Why am I going on about this here? What I want to emphasize is that there are cyclical periods where certain types of assets, the market leaders, in this case, those that are the largest value plays in the market, the highest in regards to valuation, the safest bets historically speaking, that maybe don't maximize returns in the grand scheme of things, but generally in the short term are plays that people can go to that are resilient, time tested, they've been around the block for a long period of time, and they have the largest market cap. Where these plays do very well and altcoins bleed, the risk-on plays either go practically sideways, they have minimal to no returns, or they end up losing valuation or severely underperforming for that matter. And there are also other periods of time where that's completely flipped on its head, where being risk-on is going to pay it forward no matter if maybe even the macro environment is there or not. But generally speaking, the small caps and the mid caps are accelerating and they're making massive amounts of returns versus that of the more defensive plays, which may still be doing well. Bitcoin may be performing well, ETH may be doing well, but those altcoins are really where the firepower is. That's where you make those generational returns, right? So we have these periods, these waning periods where essentially certain asset classes do better than others. And as we've emphasized, so we take it back here to Bitcoin, we talked about the fact that we may be getting the first blue flip here. Really depends on how we close. We're at just $200 above where we need to be. So if that starts to correct, then again, things may change here for Bitcoin. We may not be getting that bull market confirmation yet, or at least a higher inclination that we're going to get a bull market here near in the future. But the key point here I want to mention is that while Bitcoin here is starting to teeter on flipping its trend to the blue side, which is in favor of the bulls, we can see here that altcoins are incredibly far away from that flip. With our custom indicator that we utilize within the newsletter, which actually has a pivot showing the price point we need to cross for our indicator to flip, even that pivot is far away from where we are right here in regards to valuations for all altcoins excluding ETH and stablecoins of $213 billion. A far cry away from generally where we got out of the market at around $320 billion. So this looks like it's ready to continue moving lower. I have no doubt, looking at the candle pattern here, that maybe we get a slight up move here where dollar valuations move up, and then you have a tall wick that just gets obliterated by the end of July. I don't know what it is or what it's going to be, but that looks the kind of setup here. I've seen a lot of charts, guys, and on a monthly, when you've got a buildup like this, you have a fake out, and then you just start bleeding downward, guys. This does not look good. And I want to make an argument here today that this is not just me bashing on the names we talked about. I'm not here to bash Binance, I'm not here to bash MATIC, Cardano, or Ethereum, or the broader altcoin space as a whole. I'm just here to talk about how not only this is a normal part of crypto markets, but more importantly, that we've also seen this, and we continue to see this in equity markets, in the stock market as well. There are periods of time where the large cap stocks generally far outperform the broader stock market. And you all have probably been feeling that right now with the kind of performance of names like Nvidia, of stocks like Apple. But we can just go ahead and we'll run through some of these here, right? Just take a look here at Nvidia's performance month after month after month here has been continuing to print green. Apple as well has started to recover here to new all-time highs as of this month in June. We also have as well many other stocks like Meta, which have massively recovered a lot of their losses, just completely blowing things out of the water here. And we also have other stocks like Google as well that have started to move higher, as well as Amazon, off of the supposed AI hype that's going on right now. And that has led towards a pretty big distortion here, where since back here roughly in around October, when we set in a double bottom here in March, we've seen this massive acceleration in the overall large cap plays. Now what I'm looking at here is a custom ratio. Again, you guys know, if you watch the channel here, drop a like for the ratios. We like to analyze ratios between different types of assets or indices. And what we've essentially done here is we've taken the S&P 500 or SPX, and we divided it by RUT, which is the Russell 2000. These are both stock indices that track a whole range of stocks. The S&P 500 tracks the 500 largest companies, and on the other end of the spectrum, we have the Russell 2000, which is a mixture of 2,000 different small caps in the stock market, right? So essentially, this gives us a really good measurement in this ratio to determine whether or not the large cap stocks, really the high concentrated large stocks like Apple, Microsoft's another name we forgot to mention earlier, Nvidia, Meta, all these kind of big tech plays that have been really dominating the world, Google, right? All those names, whether or not they are outperforming the broader small caps. Now, we've seen generally since back in 2014, since we have a structural double bottom in this ratio, again, this is a significant reason why we cannot ignore these ratios, guys. These ratios are incredibly important. And same goes here back during the 1990s, where we saw a lower high here in those plays. It's very important to come back to this, but we can see that since 2014, this has been a broader trend. Now, we saw a pretty big disruption in that during this wave of COVID, where there was a lot of stimulus, a lot of retail traders coming in. Essentially, small cap stocks do phenomenal when there is retail liquidity. When there is a surge of retail traders and retail speculators, they like to buy cheaper stocks, generally speaking. They don't want to buy into the crowded names. These are periods of time where institutional capital is the major driver. And we can generally see that we are back up towards our relative highs since back in March of 2020. Now, there are a couple different ways to feel about this. Some people will immediately jump the gun and take the bearish side and say that this means that we are about to crater downward. We're back where we were in March 2020. It's time for a correction. Some people on the other end of the spectrum will say that, hey, Nick, this looks like it's about to break out, and we could be repeating either this kind of blip here in the 1990s where we accelerated a little bit further before we really start to pull back, or we're here in the midst of the 1990s here in the 2020s. Essentially, we're in our roaring 20s, and this is just going to keep going up off of generative AI, and that Nvidia, TSMC, Microsoft, all these names are the ones that are really poised to hold out in this environment and continue to accelerate off of potential growth. And I think there's an argument to be made on both sides. All I'm here to say is that no matter if you believe the market is going up or down, you need to be watching these ratios. You need to have them on your radar. And that's why I share the ratios with you guys here. We want to share a ton of great free content. You guys can add this. I'll show you how to do it. You essentially type in SPX, hit the down key here to make sure we get the right price feed for the indice. And on top of that, we're going to divide it here by RUT. And we're going to hit the down arrow here again, Russell 2000. And just like that, you'll have this chart here. And you guys can, again, add this towards your watch list within TradingView. But generally speaking, we are at a pretty big make or break point here. If the market doesn't show up to the plate and continue supporting these large caps, and we start to see a pretty substantial decline in them here in the next month or so, then it may be time to start looking at small caps and looking for great discount opportunities on those that are performing quite well. Outside of that as well, if we do see a really big green close here for the month of June, or maybe a nice performance here in July, this might put us in a position where, although we're going to probably be looking for some pullbacks or discounts back to those lower moving averages, getting us to rethink our thesis on a bear market still playing out and possibly consider that we may be in a bull market, and these large caps, although they're not going to perform probably as nicely as small caps would during those optimistic periods, that there may still be some more upside. This is the critical thing to think about, guys. We always have to keep an open mind, and I emphasize that here in the channel here, that we are always keeping our open mind here. As much as we do believe markets are going to pull back, we've got to keep track of the data here. And it may be a little more nuanced than essentially being in a bear market. Altcoins and the small cap stocks and the broader stock market as a whole may go relatively sideways or underperform, but maybe large caps are having their moment right now. Maybe we are going to see some kind of acceleration like during the dot-com bubble, or a more moderate one like here in the 1990s. But at the same time, generally speaking, historically, we are in a period of time where it is generally less favorable to be in these large caps. So this isn't something where I would be dollar cost averaging or building positions for the very long term for these plays. Again, you can ride the wave. Maybe some of these companies will still be at a good price where they're at right now, but valuations are quite high. Just bear that in mind here, guys. I see it more as a short-term thing. One thing that kind of proves to me to a large extent that I think we are in kind of a short-term run-up here, or at least makes me lean in that direction rather than being 100% confident, is taking a look at the consumer cyclicals. Right? Now, I know these are boring stocks to look at. I know they're not the NVIDIAs, they're not the Teslas of the world, but taking a look at names like Procter & Gamble can give us a really interesting perspective into the correction that we saw that many believe may be the end of the bear market, and taking a look here at what we've seen historically speaking. Procter & Gamble declined 26% from top to bottom, roughly speaking, over a period of around 9 months. If we take a look at history, we can see that prior corrections were 31%, 42%, 57%. Now, generally, in the case of Procter & Gamble, the corrections are getting weaker over time as the company does expand. But we've also had weaker corrections in the past, like this one back in the 70s. Generally speaking, all of these led towards a red flip. And we did not get that red flip here on our quarterly momentum indicator. So this has me a little bit concerned that the market is buying in again towards a relief rally and does not have the kind of steam momentum like we've seen in the past that really drives valuations much higher here over that period of time. Along with that as well, United Health Group, right? United Health Group, huge healthcare conglomerate, not my favorite company, but definitely one that has been able to swallow whole the entire healthcare system in the United States and keep it as crappy as it already has been for so long. But generally, you can see here that just like back here in 2006, we have this period of stagnation in the name. And that is not good to see for multiple quarters here, multiple years now, since back in 2021. This has been stagnating, and we have yet to see that red flip. But we are looking like we're getting very, very close towards getting that here. And if these names, the United Health Group is not a name to scoff off here. It's a $449 billion company. If these names start to severely underperform, these are those large caps, I have a feeling they are going to hit the sentiment of even the tech plays. And they're going to at least leave investors waiting to see if these technology plays really meet up towards the hype. Along with that, Johnson & Johnson, again, another large cap company, $424 billion, has continued to underperform here from around $186 billion towards around $185 per share, down towards where we're at right now, 163. We have not gotten that red flip yet, but each and every time we had these pullbacks, by the time we were done, we were in red territory on that quarterly indicator. So I want you guys to kind of keep these on your radar and keep open-minded to the idea that long-term, as we've been emphasizing here on the channel, there are a lot of metrics that while we have some short-term optimism in the market, and a lot of people are really hunky-dory around AI and all these supposed narratives that are just going to supposedly pave the way for these companies to double or triple, it's very difficult for these large caps to really perform so well. So you could very well see in this situation where we do expand up here that perhaps we're about to still prepare for a correction in valuations. That's why I'm kind of pulling into this topic here. We could still very well see a massive correction in valuations for equities, but it could be that the resilient names are those large caps during the discount opportunity. But when optimism returns to the market, we see the opposite of the dot-com bubble. We essentially see that the small caps come roaring back. While people fled towards the large caps during the pullback, small caps will be beaten down. They'll be at really cheap discount valuations, and that's where it's time to scoop in on all of those alternative energy stocks, all of the different types of small caps, and all potential narratives that people might be getting interested in. Any name you can think of, right? Companies that are losing money, names that are, again, just momentum plays at the end of the day that would attract retail investors. I think that is what could very well play out here, and that also could repeat itself in the more microsphere of crypto through altcoins. I think that is something we need to keep an eye on here, especially as retail liquidity is drawn towards these plays. So again, keep in mind here that this does not prove whether or not the market's going to go up or down, right? We could see this go down here and stocks could rally to new all-time highs still, and vice versa. We could see these valuations go up and the stock market could continue to rally or crash. It's just something about determining where you want to allocate your portfolio, how you can be allocated towards market leaders. Now, if you guys like this kind of content here and this interesting way of looking at the market far beyond just doing standard price analysis and short-term trading like a lot of others out there. If you like this kind of content, I highly recommend you guys check out the Dash report down below in the description. You guys will not only get access to our momentum indicator, which we feature here, the red and blue line indicator, which we discussed. You also get access towards a premium version of that has a pivot letting you know what price point the candle needs to close above. But on top of that, you guys will get access towards our monthly newsletter, 20-page report on cryptocurrency, stocks, commodities, and Forex. You guys get access to the Dash Report discussion group, our mid-month webinars where you can ask me questions live on the webinar. We can dive into the charts. You guys will get access towards our trade alerts, the whole shebang. We try to add in all of that, and you guys can get 20% off on an annual newsletter. I'll leave a link down below in the description. It's a great way where you can support the channel. If you guys were considering maybe supporting us on Patreon or something, we recommend doing the newsletter because you guys get so much out of it in this case. And we have a great community of hundreds of members in the Dash Report discussion group that you can interact with, ask questions, and continue to share content with. But that's going to be it for today's video, guys. Thank you all so much for watching. I hope you guys are having a fantastic day wherever you are. And until the next one, I'll see you all on Friday. Take care, everyone.